Okay, let's get started. Hi, everybody. Thanks so much for joining us today. We're super excited to have you here with us. Lots to talk about. But before we get started, we're going to pop up a poll on the screen for you. And it's about the type of business that you are part of, so by industry. So it'd be great if you would pick which industry you're part of and just submit that as the start. The other thing that would be really cool for those of you who are with us so far, if you would be willing to share what town and state you're in, there's a chat on the left-hand side of your screen that you can actually share. So it'd be really cool where you're coming from. I see somebody's from Chicago, New York, Missouri, another New York City. Awesome. People from Arizona and Minnesota. Looks like we've got a good gamut of people from all over the place. A couple people from Texas and California. So welcome. Again, really happy to have you here with us. I think you're going to find that this is really worth your time today. So before we get started with the presentation, I want to introduce myself. I'm Rachel McCool from GoDaddy, and I'm going to be your host today. And I live in San Francisco, California, and manage GoDaddy's online community and other community programs. So we love getting to know you guys. So if you want to also, please feel free to share not only where you're from, and I see more people are adding, you know, you're from Tulsa, Oklahoma, and Memphis, Tennessee. Awesome. Luther's from Louisville, Kentucky. So we've got a lot of people from all over the country. But feel free to go ahead and share your business. If you want to share the URL to your business site, we'd love to see what you do and who you are. So we know that this continues to be a really challenging time for most of you. I want to remind you that GoDaddy launched an initiative called Open We Stand with a coalition of over 70 brands, including, of course, us, GoDaddy, NextStreet, our partners, American Express, Salesforce, Microsoft, LinkedIn, PayPal, GoFundMe, and many, many more coming together to provide small businesses access to resources, content, special offers, benefits, pledges of support, and a community for people like yourselves to connect with one another and provide helpful tips and inspiration. So if you haven't already checked that out, do so, and it's at openwestand.org, and there's a lot of great resources there for you. So I am really excited to be here today with the great team from NextStreet, who's one of our partners of Open We Stand. The NextStreet team are experts in advising small businesses like you on capital, customers, and services. So they're here today to talk about getting your business the money it needs. And I'm sure you're going to get a lot out of all the information that they're going to share, as many of you may be looking at next steps to get some cash for your business right now. So let's get started. I'm going to introduce the NextStreet team members and GoDaddy team members who are here with us today. So I'm going to start with Ricardo Devillon. And the spotlight's on Ricardo right now. So Ricardo is the director of our New York City Business Solutions Lower Manhattan Center. And as center director, Ricardo leads a team of talented account managers to connect New York City-based businesses to a suite of services, including business education, legal services, funding, and more. So hi, Ricardo.
Happy to be here.
Next is Marian Ciccolello, and Marian is a director within the New York City Business Solutions and serves the Queens area. And after a successful advertising career, Marian has been providing direct services to small businesses for the past 15 years, both in the nonprofit and public sectors. So welcome, Marian. Next is Stanley Dutterville, and Stanley is the finance account manager for the Queens Center, working with Marian. And Stanley is an expert in helping small businesses grow, operate, and expand their business using financing options. And Stanley will be answering your questions today via the Q&A, and he's also going to be in chat, so say hi to Stanley and all the rest of our panelists. And then also behind the scenes with us today are Matt Pitteresi and Katie Johnson from the NextStreet team. And they will be supporting our technology and presentation. You also may see them responding to specific questions as well in the chat. And last but not least, my coworker, Jessie Wilson from GoDaddy, and Jessie's a community manager and helps with all of the community things that we do for GoDaddy. So welcome, Jessie. So as we do the presentation, we're going to try to get to as many questions as possible in the time that we have. So feel free to add questions throughout the presentation, and we just want to know what's on your mind and how we can help you. Also want to let you know that directly after this webinar, the Nextstreet and GoDaddy teams will be in the GoDaddy community for office hours to answer any additional questions you may have. We'll provide a link to where you can go to ask questions or just participate in the conversation. So be looking for it in the chat near the end of the session. All right, enough for me. So I'm going to hand it over to Marion to take it from here.
Hi, and welcome everyone. Thank you so much. We are happy to be here this afternoon, and we have a lot of great information to share with you, but I just want to go over some basic rules, and I think some of them we already covered. All of you, the attendees, are in view only, and our panelists will be able to answer any questions that you have, hopefully during this session. We're going to ask you to put it into the Q&A, and again, we have folks standing by to answer it, as well as send us questions so we could address it during today's session. So we want this to be really for you, and we want you to participate as much as you can. So please go ahead and chat with us and Q&A. Please feel free to communicate with each other as we go through the presentation as well, and to engage with each other. We have a lot of people on from all over the country. A lot of us have the same challenges and struggles, so it'd be great to share, as well as all the learnings and the successes that we're having. So please participate. And during the course of today's session, we will do polls. We're going to do another one right now, and I'm going to ask you, how many employees does your business currently have? Please take a second to fill out the poll. I'm hoping we're going to get some results. Someone's saying 25. Fabulous. Great. Okay. Here are the results. And as suspected, most have under 5 employees. The majority of small businesses are under 5 employees. I think the term we use is micro businesses. So welcome everyone, and let's continue on our journey today. So as we discussed, we're going to share with you a lot of information, and you can take notes, but we will share the slides. We are recording this session, and we will follow up in an email. And as Rachel said, afterward we'll be conducting the GoDaddy Community Forum, and we hope you'll join us there to answer more questions and get more depth of understanding of this topic. So I am going to just briefly now give you just a quick 3 portions that we're going to follow, which is understanding your funding options, getting my financials in shape, and finding the right funding for my business. And we'll go through each of these sections, and again, we'll be engaging you during them, but I'm going to turn it over to Ricardo to take us from here.
Thanks, Marion. Hello, all. So today we're going to be discussing a couple of key topics. To Marion's point, the first thing that we're going to want to cover is how to understand your funding options. And so we'll talk about where to start and also discuss some very popular funding sources as they exist today. We're also going to take some time to talk about your financials. I know business financials could be a little scary, but today we're going to take some time to hopefully demystify the top 3 core financial statements that every business owner should be at least aware of at a high level. And the last thing we're going to do is we're going to help you understand how to find the right funding for your business. Every business owner is different. Their needs can be different. And so the purpose of this presentation, or one of the purposes of this presentation, is to help you understand how to really navigate the different funding options and identify the most appropriate funding for you and your company. First place we're going to start is understanding your funding options. And so let's go ahead and dig in. Now, before we start looking through different funding options. I think it's really good to set the stage and help you understand what some of the common uses for business funding include. And so when you think about small business funding, here are a couple of options that you can consider to use the funding for. Some small businesses use traditional funding to purchase equipment or new inventory. You can use that funding to acquire new space for your business. You can use that to either expand or pivot your business in one direction or the other. If you have a retail storefront location, you can use some of the funds to cover any sort of improvements that you might want to consider for your business. We mentioned number of employees for participants on this call. You can also use the funding to cover things like paying employees or general working capital expenses. And so when I say working capital, this is usually short-term money on hand to cover like more immediate pressing needs like salary. Here are some questions that you should be considering in preparation for obtaining funding. First question, of course, is why does your business need the funding? Why is it at this point today that you're going out pursuing funding for your business? You want to be able to answer that. The second is, how will this money help your business achieve its goal? So it's one thing to be able to receive the funds, but how do you effectively use those funds to achieve either your short-term or long-term goals? Last but not least, how much money do you need? I think one of the things that we're always seeing from a lot of small businesses is this idea of, hey, we need capital, but they're not really able to really specify how much capital they need and what they need the capital for. As a small business owner, you want to be able to understand how much is it that you're going to need, how do you expect to pay it over time, and what your plan is. And so we're going to walk through a couple of these different ideas as we go through this presentation. I think at a high level, what I want to say is there's no real right or wrong way or reason to consider funding. I think as a business owner, as an individual, you want to be able to navigate your business such that when points come up, you can go ahead and pursue those funding opportunities. And so no right or wrong reason to consider funding.
Alrighty, we have another poll and just getting started here. So we want to know why are you most interested in accessing funding for your business? We'd love for you to check the main reason you would be looking for funding at this time. Thank you for marketing. Thank you. Critical component of any business.
Marketing is a really good example of working capital needs. Again, short-term, more immediate needs like covering salaries or covering marketing expenses, right there with working capital.
So here we have it. Expanding or pivoting my business came as number one. And obviously, given the current climate we're in, that's a critical point that people are working towards. How do I pivot my business during these difficult times? But what came in second, I guess we have a couple of, but purchasing new equipment or inventory came in number two. So let's keep going. Let's find out more.
All right, before we help you understand how to evaluate the different funding options, I think it's important for us to walk through what is the type of funding that exists for small businesses right now. And so here's a quick rundown of the different type of funding options that small businesses can consider for their business. And so we are ranking these options from low to high in terms of grants would be the lowest cost of funding for you and your small business, whereas high would be something like equity. And so let's quickly walk through each one of these key funding sources, and then we're going to speak more about the more popular funding options, which include crowdfunding, debt funding, and equity funding. The first place to start, and I think this is, especially coming out of the pandemic, one of the terms that are being thrown around is, how do I get access to grant opportunities? For those who are unaware of what a grant opportunity is, there are different organizations or institutions that make capital available to small businesses that do not require payback. Based on our experience, grants have not been a very popular funding opportunity for small businesses just because they're not as available. Coming out of this current situation, we're starting to see a little bit more in terms of grant opportunities that exist. However, I do want to caution by letting people know that grants are still very, very, very limited in terms of their availability to small businesses. And so there are more grants available to small businesses coming out of the pandemic. However, it's still on the rarer side of opportunities. Self-funded using cash from existing operations is another example of ways in which you can fund your operations. And so when you think of making your profits, decisions that you make with those profits can either help grow your business or not. And so as you think about generating revenue and generating income, thinking about how to best leverage that capital is extremely important. Crowdfunding is one of the more popular and more sort of nuanced loan product or funding products that have come to market. We're going to speak a little bit about what crowdfunding means as we go through the presentation. For the sake of this one slide, I just want to help you understand that crowdfunding is becoming more and more popular for small businesses, and it's becoming a really smart way for small businesses to raise the capital that they need in order for them to continue growing their business. A lot of small businesses are aware of debt financing. We're going to take some time to really walk through debt financing. I think a lot of people understand debt financing at a high level, but there are more than one product that you should be considering when you're thinking about debt financing. And so we're going to walk through what that looks like. We're also going to talk about equity funding. And so again, not as available for small businesses. However, more and more we're finding that small businesses are getting into opportunities in which they can consider equity funding. And so we'll walk through what that looks like for you and your company.
Hey, Ricardo, before you move on, I just want to ask a question because I know there's a lot of chat about grants coming up, and I don't want to call it, I know in the past, as you said, grants have been very limited. Most of them are competition out there, and they're very competitive. Obviously, with the pandemic, there's been more grants available, but just called out in the chat, you know, it's still many of the grants go to nonprofits to support the small business communities. That's important to know.
Right.
Also, you know, it's not technically a grant, but PPP, which a lot of our participants are saying they got, is forgivable. And so that could be perceived as a grant because you don't have to pay it back.
Right, right. Good points, Marion. Good points for sure. So let's talk about debt funding. So when you think about debt funding, the best way to, or the standard definition for debt funding is raising capital to either acquire a business or fund business operations by borrowing money from a lender or creditor. And so here's how this works. On the left-hand side, what you should see is you should see a lender. Lender usually comes in the form of an individual. For most of us, it comes in the form of a traditional bank that would provide capital under some conditions of repayment. On the right-hand side, you have you as a borrower. This is a small business or business owner who's approaching these lenders with a request for capital. The agreement that's usually made between the two parties is that the lender would provide a term loan or a line of credit to the small business in exchange for a monthly payment. That monthly payment would consist of both the principal payment and the interest payment. The interest payment would go to reduce whatever debt was provided on the onset, and the interest payment is the cost of doing business. This is what you're going to be paying in order for you to borrow this money. I really like to give real life situations or scenarios to help explain the different loan products for small businesses. And so I'm going to give an example to help explain the term loan, but I think it's equally important for us to walk through what a line of credit is. And so I'm going to give a similar example to help you understand the main differences between pursuing a term loan and pursuing a line of credit. Now, when you're pursuing a term loan, let's say I have a small business myself and I'm looking to acquire $10,000 in capital. I walk into a commercial bank, my local commercial bank. I ask them for a term loan of $10,000. They ask me to fill out an application. I complete the required paperwork, and I get approved for $10,000. The way the term loan works is once I am approved for that $10,000, that money, that entire $10,000 is placed into my account. And the month after, I have to start making my monthly payments, right? So every single month for a fixed number of months, I'm going to be making my monthly payments up until my loan has expired. A term loan is known for having a fixed loan amount, which means the amount that you're approved for is the amount that goes into your account. It's a fixed term. And so when you're applying for the product, the lender should speak specifically as to how long you have to pay that loan back. It's a fixed monthly payment, which means every single month you should expect the same amount in terms of monthly dues up until payback. And last but not least, for a lot of small businesses or small business loans that are term loans, your interest rate's going to be fixed. And so what that means is, regardless of where the market goes, your interest rate does not change. If you are approved at a rate of 7%, your rate's going to be 7% up until the time in which you finally pay off the loan. And so that's pretty easy to understand. It's a traditional debt product. You walk into the bank, you receive the funds, and you pay back over the life of the loan. I think one of the things that a lot of small businesses are not aware of, and something that can actually be really, really helpful to small businesses as they continue to grow, is a line of credit. A line of credit works a little bit different from a term loan. Here's the big differences. With a term loan, the way it works is you walk into a bank, you apply for a loan of, let's say, $10,000. If you're approved, that money gets placed into your account. Your line of credit works a little bit different. If you go into the bank and apply for a line of credit, the line of credit works very, very similar to like having a credit card without the actual card. If you're approved for a line of credit of $10,000, so to speak, you're not going to have $10,000 that gets placed into your bank account. You're going to, if you're approved for a line of credit for $10,000, you're going to then have access to as much capital as $10,000 to use for any sort of short-term needs that you have. Very much like a credit card would allow you to have a credit limit and be able to draw on that credit card up until that credit limit, right? And so line of credit works very similar to a credit card, where it's not actually having money deposited into your account, but if you are approved for a line of credit, it's gaining access to a separate account that allows you to draw up to that credit limit to take out funds as needed. Here are the benefits for the line of credit. The benefits for having a line of credit is that if you have any short-term needs, I think some participants mentioned during the polls that they need working capital, or they need to cover salaries, or they may need to cover things like account receivables. Any sort of short-term needs that you may have, a line of credit's a really great option because it allows you to take out as much as you can up to the credit limit to cover those short-term needs. And then you can pay back when you actually have capital coming into your business. And a caveat is then you can reuse that line of credit for future purposes. This works a little bit different from a term loan, whereas with the term loan, once you receive the funds and you use those funds, you can't go back and just take advantage of those funds once more without applying. You'd actually have to go back to your bank and apply for a new loan, whereas with the line of credit, you have the option to keep that account active and draw on it as you need. One of the pieces I want to stress with this line of credit is that a line of credit, it's a variable product, which means that you can only use this line of credit, or you should only use this line of credit for short-term needs. The interest rate can fluctuate, which means if you are approved at a rate at 6% this year, that rate may jump up to 10% 3 years from now. And so you want to be very careful about how you leverage that line of credit. The second thing is your credit limit may, very much like a credit card, may fluctuate. Your bank may decide to either increase or decrease your line of credit interest rate or term. And so it's important for you to understand that it's a short-term product and should only be used for those short-term needs. And so as we go through the presentation, we'll go into details as to like what that means for you as you think about your options.
Hey, Ricardo, do you need collateral for a term loan or a line of credit?
Yeah, it's a good question. And so banks give options depending on the bank and depending on their lending process. They may or may not require collateral. And so we're going to use part of this presentation to help everybody understand what collateral is. It's basically an asset. We'll speak a little bit more specific to that. However, to answer your question, Marianne, banks may or may not require capital or collateral for term loans or line of credits. The second type of funding options that we're going to cover today is equity funding. Equity funding is a source of funding for your business where investors provide cash in return for an agreed upon percentage ownership of your business. And in some cases, they may, very much like a traditional loan, ask for a specific rate of return until payback. And so very much like the previous slide, on one side, the left-hand side, you have the equity investor. This is usually an individual or institution providing capital for ownership stake or rate of return. And on the right-hand side, you have a small business borrower. The way the relationship between the investor and the borrower works is that the investor agrees to provide capital to the small business so that they can either grow their operations or cover some of their working capital needs. In exchange for that capital, that borrower has an option of either providing the equity investor with a percentage of their business, or they could decide to provide a specific rate of return. Whereas it's, hey, if you provide me with this amount of capital every single month, I'm going to agree to pay this amount until that loan, those terms have been agreed upon, right? And so the relationship for the equity funder and the small business borrower, for the most part, is providing capital in exchange for either ownership stake or a specific rate of return on a monthly basis. The third type of funding opportunity that we're going to cover today is crowdfunding. Crowdfunding is a source of funding for your business that raises small amounts of money from a large group of people through a dedicated platform. And so when you think of platforms such as like Kickstarter or some of these other crowdfunding platforms, the opportunity that's presented there is if I'm a small business borrower and I need, let's say again, that story of needing $10,000 to grow my business, one of the options I can consider is hopping onto a crowdfunding platform, detailing what I need that money for, so helping my potential crowdfunders gain some insight as to how I'm going to leverage this money to continue growing my business. And these individuals can lend me $5, $10, $20, up until the time I get to my campaign goals. And in exchange for that capital, me as a small business borrower, what I would do is I can agree to provide these crowdfunders with one of three things. I can agree to provide them with a small share of my company. I can agree to provide them with some sort of debt repayment where I would provide them their capital back with some sort of interest attached to it. Or I could provide them with either a product or service for their contributions. And so imagine owning an ice cream shop and you say anybody that provides $5 will send you a free tasting of our ice cream completely free or as an exchange, right? And so it's a very new age approach that factors in equity financing and traditional debt financing and applies it to a larger audience.
Ricardo, one of the questions we got was a crowdfunding platform. And I just want to add, if people are not familiar with Kiva, they're a nonprofit that does crowdfunding. So if you're not familiar with them, it's KIVA. I encourage you to check them out. Nonprofit doing crowdfunding for small business. Yeah.
And a really cool thing about Kiva is that they're actually providing loans to small businesses at 0% interest rate and zero cost. And so they're a really great nonprofit that's charged with helping small businesses. And we'd be happy to talk a little bit about them and some other options during our Q&A for sure. GoFundMe is also a very popular option that's leveraged by not only small businesses, but individuals. And so very similar concept there. So now that we've done an overview of the different funding options, before we start digging into helping you understand which funding options make the most sense for your individual business, I think it should be good practice amongst everybody who's on this call today to really understand their financial statements. And so we're going to take some time as part of this section to talk about the core financial statements and help you understand how you can best leverage those financial statements. There's a good question about regarding if crowdfunding requires collateral. We're going to touch on some of the requirements during this presentation, but to quickly answer your question, Vicky, no, it does not require collateral. So many business owners are intimidated by financials, and that it's completely understandable. Financial statements can look very, very scary at first look, but a strong understanding of your numbers can help you monitor financial health for your business It can also help you make sound business decisions, including help you understand what type of funding options make the most sense for your business, right? And so I think that the point that we want to stress as you go into reviewing these core financial statements is, yes, it's a little scary to look through a cash flow statement or a balance sheet or an income statement. However, a good business practice as a small business owner is to be able to get comfortable at understanding what those financial statements are and how you can leverage those financial statements to make key business decisions, to help you understand whether it's time to contract or to expand your business. It helps you understand what makes you really profitable at the end of the day. It helps you be credible with potential partners or potential clients. It can help you understand different strategies that might make sense for you and your business as it continues to grow. And so it's important, even outside of just pursuing funding, for you to understand your business financials. And we're going to walk through just a very quick introduction as to what they look like, but I would encourage, as questions come up, please feel free to ask. So as a business owner, you need to pay attention to a variety of different numbers. You got to be able to pay attention to your sales, your inventory, your profits, your cash flows, a lot of different variables that exist. Your core financial statements helps you to understand, not only understand your financial health again, but also understand how to increase or gain access to funding opportunities. The three core financial statements that we're going to discuss today include your income statement, your cash flow statement, and your balance sheet. These three foundational statements can help you understand such things as your profitability, can understand how you can leverage potential cash flow, and it can help you understand credit, right? And so as we go through the next couple of slides, we're gonna walk through these different statements, and we're gonna help you understand how you can best leverage these statements to pursue funding opportunities. The first statement, and one of the more popular statements, I think if you've ever seen a business tax return, you're looking at pretty much the income statement. And the income statement helps you understand what your revenue is, also helps you understand your costs and your expenses. And at the end of the day, it helps you understand whether or not your business is profitable. And so the foundational formula that we have to help you understand what an income statement is you're gonna take your top line revenue or your sales, you're going to subtract any sort of expenses that you have, and that's gonna equal your net income, your profitability or your losses, depending on how your business does for that year. So the big takeaway from an income statement is it helps you understand, is your business profitable at the end of the year? Everybody on this call should take time to review their own personal income statement. If that means pulling up your last year's business tax returns and looking at your revenue, your expenses, and your net income, do that. If that means using whatever accounting software you're using at the moment to pull up your income statement, you want to be able to look at that income statement so you can understand where you stand in terms of profitability. The second statement that's also important is the cash flow statement. The best way to understand a cash flow statement is a cash flow statement helps you understand the movement of cash within your business's operation. It's one thing to be profitable. It's another thing to be cash fluid, right? A lot of people, they assume profitability also means that you have cash on hand. That's not always the case, right? A cash flow statement helps you track where's money leaving your accounts, where's the money coming in, and what are some of the cash needs you have at that point in time. Right? So you want to be able to understand your cash flow statement because it can really help you understand, it can really help you strategize as to how much cash you're going to need at certain points or periods throughout the year. The last statement that we're going to cover or talk about as part of this slide is the balance sheet. The purpose of the balance sheet is to help you understand your assets, your liabilities, and your equity. And so when we think about assets, the best way to think about assets are what are the things that I own as a small business owner, right? So examples of the assets could be inventory, that's an asset. Any sort of equipment that you have is an asset. Even things like trademarks or patents, those are things that you own that only your business owns can be considered assets. And so for you as a participant, start thinking about what are some of the assets my business owns. liability is another word for debt. That's truly what it is. And so when people say liability, you should automatically be thinking, what is the debt that I own? Debts can come in many different forms, right? We talked about taking out traditional term loans. We talked about line of credits. But even things like credit cards could be considered a liability or a debt. If you have vendors that you owe for inventory that you're receiving, that could be considered a debt or a liability, right? And so your liabilities are anything that you as a business owner owns or owes. And equity is the amount of contributions or capital contributions that have been funded to your business to help its growth. And so think back to the moment in which you first started your business. The capital that you invested initially would be considered your equity. This is the money that you've put in to start or grow your business, right? And so a balance sheet helps you understand your assets, your liabilities, and your equity. As you think about pursuing potential funding opportunities, there's some additional documentation that is helpful for you to consider in preparation for funding. The first is a company business plan or growth plan. I think there's a lot of like hesitation around putting together business plans. People assume that a business plan means putting together a 30 to 50 page document to help tell your story. In our experience, I've been working with small businesses for over 10, 15 years. For small business lenders, if your business plan is over 3 to 4 pages, you're probably doing way too much. In fact, for a lot of the businesses that we work with, we've compiled a template that consists of roughly 20 to 25 questions. If you can answer those questions, you have yourself a very simplified business plan. And so the big takeaway I'd like everybody on this call to have for a business plan specifically is don't overthink a business plan. You want to be able to speak to what your business is, who are your target clients, how do you source your products, your material, how do you market, and be able to speak to that very efficiently. It should not be dense, it should not be detailed if you're looking to pursue potential funding opportunities. Everybody should have a business plan, even for themselves. Even if you're not ready for pursuing funding, a business plan or a growth plan is a really great way to keep yourself structured. Another really helpful documentation would be a set of business projections. And so as you think about coming out of this pandemic, the next 6 months, 12 months, 24 months, you want to be able to think through how do I foresee or project my revenues over the next 6 to 12 months? What are my expenses going to look like for the next 12 months to 24 months? This is a free exercise. It doesn't cost you anything at all to create projections. However, what it does require is time for you to sit down and be really reflective as to what your business can feasibly do over the next 6, 12, 18, 24 months. You should all take some time to reflect on that and go through the exercise of putting together a set of projections. Tax returns are something that are readily available, and you should consider putting together or you should be reviewing your tax returns. Even if you work for a CPA or an accountant, you should know what those tax returns look like. Creating a marketing plan is something that's helpful, and it can be included as part of the business plan. Helps you understand how do you connect to your clients efficiently. What are the steps or strategies you're going to take to do just that? And the 5 C's, which we're going to cover during the next slide, helps you understand how bankable or attractive is your business. And so let's go ahead and dig into the 5 C's. And so as a potential small business borrower, there are 5 C's that you should be aware of to help you think about whether or not you're ready to pursue funding opportunities. Those five C's include capacity, collateral, which a couple of individuals spoke about as we went through this presentation, capital, conditions, and character. You want to be able, as a small business borrower, you want to be able to take some time and reflect on each and every one of these C's to see how you stack up. The first C is capacity. And capacity is really your business's ability to repay a loan, right? And so there are a couple of different factors that are included when you think about capacity. That is, does your business generate enough income to cover your monthly debt obligations for a loan? How's your current credit score? Is that at a point in time, is that at a level that would be deemed attractive to small business lenders? What do your financial metrics look like? Meaning, is there seasonality in your business? Are there high seasons and low season? And if there is one season a better time to pursue funding over another? You want to be able to think through those different pieces. Your collateral, which we quickly touched on, but collateral is pretty much any assets that you own that you would be able to pledge to essentially show that you're committed to this loan. And so think about any sort of assets that you currently own that you'd be willing to say, hey, look, if you're comfortable enough to lend me this funding, I'm comfortable enough to pledge this item or this asset as collateral. Some of the more popular types of collateral would include any personal real estate. If you have any personal real estate, lenders are willing to have conversations around providing you capital in exchange for that personal real estate being pledged as collateral. I know it's a scary thing when we hear this idea of collateral and pledging. I've rarely, if at all, seen a lender track down somebody's personal properties to cover loan obligations. What you'll see first is these lenders go to court and go through some sort of litigation. However, you want to make sure you understand that when you're pursuing funding, assets or collateral would be something that would be open to discussion when pursuing funding opportunities. Capital is another piece that lenders want to understand. And so if you're going to go to a lender or a potential equity investor, in some cases even crowdfunders, you want to be able to speak to what sort of capital you've personally invested into your business to grow your team. There's the idea of what's your skin in the game. For lenders or potential investors, they want to get a really good insight as to how much money you as a business owner have personally invested into the business so that they can make a determination as to what is their risk and also joining the fray. And so you want to be able to speak to how much capital have I already invested into my business and how much more am I going to consider moving in. Conditions is becoming more and more apparent as we come out of this pandemic. You want to be able, for your specific industry and for your specific business, to look at the market conditions and see what are some of the risks and opportunities that exist as of today, right? And so when we think about being self-reflective, you as a business owner should be able to go through those conditions to help you understand your next steps. And the last but not least is character. How do you come across as a business owner? Do you have history or experience in the business that you're running? Can you speak to your expertise? Can you speak to just your ability to run the business efficiently? And so you want to be able to speak to your character as well.
Hey, Ricardo, I know we want to move along, but I know the credit score is really important here. And a lot of people sometimes get confused with their personal credit score and how that reflects on the business. Could you just talk for a second about that?
Yeah, really quickly. And so when you think about a business credit score, I think a lot of lenders talk about business credit scores. What I'm going to ask everybody on this call to do is, when you think about business credit, business credit is made almost 75 to 85% of business credit is really your personal credit score, right? And so if your personal credit score needs work, you should assume that your business credit score needs work, right? So 75 to 85% of the business credit score is your actual, as an owner, your personal credit score. And the remaining 10 to 15 variable that lenders use to identify a business credit score is things like what type of industry are you in? Is that deemed high risk or low risk? How long have you been operating a business? Has it been a couple of months or a couple of years? That's how they put it all together. But the big takeaway from a business credit score is it starts foundationally at your personal credit score.
Thank you.
There are some questions around Dun and Bradstreet. It may be useful. I think it can potentially be useful. However, it's not the end all be all. I think, again, the foundational understanding that we should all have is, if you are concerned about your business credit score, the first thing you should do is look at your personal credit score and make improvements there. That can really help shore up that business credit score. Here's what you're going to need when pursuing funding. I think there were a couple of comments as to what's needed for a crowdfunding opportunity over a debt opportunity. this is a really good table that helps you understand what are some of the key financial statements or documents that will be required based on your needs. And so let's start at the top level. When you are pursuing debt funding opportunities, you should expect that lenders are going to ask you for your income statement. They're going to ask you for your balance sheet, and they may ask you, they may ask you for your credit, your cash flow statement. In addition to that, you're going to have questions regarding your tax returns. You're going to have questions that come up regarding your business plans or your projections, and your credit's extremely important when it comes to debt financing, right? And so across the board, you should at least be prepared to answer questions regarding these different options. Your equity funding opportunities are not as hard pressed in terms of requirements. Yes, if you are currently running a business, a potential equity provider may ask you for your income statement, but things like a balance sheet or tax returns may not be top of mind for equity investors. However, they're going to be very, very concentrated on how much can your business grow. And so you want to be able to provide a business plan or a set of projections. Crowdfunding, as you can tell here, has very limited requirements. And this is why this is becoming more and more of an option for a lot of small businesses. The only thing that you would really need for a crowdfunding opportunity is a business plan or a growth plan that you can use either internally to help you understand how the money can help your business grow, and a marketing plan that can help you campaign effectively to potential crowdfunders.
Right, I think we have another poll I always find interesting is how often do you review your core financial statements? Those are the ones in blue, cash flow, income statement, and balance sheet. Tell us, how often do you review them? Is it weekly, monthly, annually? Someone says not often enough. That's usually the...
Okay, that's helpful. Hey, I'm a big fan. We're gonna, a few times a year, we want to make sure that there's a healthy practice around checking financials, team. And so when you think about your personal financial statements, you should have a routine that helps you keep yourself on track. I'd recommend at least monthly. It's going to be dependent on the sales cycle, where we'll take the Q&A portion of this initiative to talk a little bit more in detail, but you want to be able to at least touch your financial statements at least once a month. Now let's talk about finding the right funding for your business. We're going to take the last 10 minutes or so to walk through how do you help identify what's the right funding opportunity for you and your small business. So when we think about debt funding, here are some things that we can consider. I think we spent a lot of time helping you understand the relationship between the lender and the borrower. Here are some questions that you should be asking yourself. I think as part of these presentations, we hate to make blanket statements as to here's why this is best for you. As an individual, you need to be able to sit down and really reflect on these questions to help you determine whether or not debt funding is right for you at that point in time. Some key considerations and key questions that you should be asking include, how's my personal credit, right? There's some really cool and free websites that exist that you can hop on to answer 5 to 6 questions about you as an individual, and it'll spit out your credit score without affecting your credit score. And so if you don't know your credit score for this year, please take some time to track down one of these sites and pull up your credit score to see where you stand. Am I willing to provide a personal guarantee? That's extremely important. Am I willing to pledge not only my personal guarantee, meaning if the business can't pay this loan, I'm going to come in and make the payment, but also am I willing to put up any sort of business or personal collateral or assets, as we call them, to back this loan? Is my funding need short-term or long-term? Remember, we talked about if you have a short-term need, you should really consider a line of credit. It's a really flexible product that allows you to dip into that account, pull out the money that you need to cover short-term needs and pay it back, or long-term needs, which can help you with a term loan would help you with those longer-term needs. I think there are a couple of options that are going across in terms of credit sites. Credit Karma is a good site. That's probably one of the ones that I actually use right now. And so I'd recommend just checking out some of these websites for credit score. Am I able to repay this funding over the life of the loan? That's another big piece that you want to be able to consider. Am I able to repay this over the life of the loan? For equity, there are different stages that you can be in. There's a startup, growth, and once you stabilize or are looking for additional growth, you can work with either individual investors, angel investors, or venture capitalists. I think the big takeaway in terms of equity opportunities for a small business is, and this is actually a really big one, am I willing to give up ownership stake in my business? The way traditional debt capital works is it's not a ownership, it's just an agreement. You're gonna be my partner for this amount of years. After these years are over, we don't have to work together ever again. Whereas with an equity investment, these individuals potentially become partners of your business. And so are you ready to make the commitment of joining an equity investor and growing your business? What are the long-term plans of my business? Do I expect aggressive growth? And if so, what do I need to get to that aggressive growth? Maybe debt capital is just not going to be enough to get you to the end goal that you're looking for. And so you want to be able to understand what are your long-term plans and how aggressive your business is looking to grow. For crowdfunding, I think there's a couple of big pieces for crowdfunding. Crowdfunding is going to rely on your ability to efficiently convey your need for capital and draw people in to the point in which they want to contribute to your cause. And so, do you understand your client base? Who are the people who get inspired by hearing your mission statement or hearing about your business or hearing about your growth opportunities? How do you find them, right? Where do they exist? What type of platforms do they usually leverage, right? How do you mobilize support? What are some things that really attract your clients? Is it small gifts and tokens? Is it potential stake in your company? Is it some sort of like loan operation where you're going to pay off an interest payment? You have to get very in the weeds of like, who are my clients? Who am I looking to potentially gain these funds from? And what attracts them to my business and my operations? That's a very big piece. And so these key questions can really help you understand, what's right for your business. Again, big takeaways for debt financing, things like your credit score, things like reviewing whether or not you want to provide personal guarantees, and understanding the terms of the loan is extremely important. For equity, I think the big takeaway there is helping you understand, am I really willing to give up a piece of my business for the sake of receiving capital? And for crowdfunding, do I understand my potential client base or potential crowdfunders? Am I willing to put in the work to create marketing plans so I can efficiently connect with those individuals, right? So very key things that you should be considering as you think about these three opportunities.
So I think we have another poll based on what we've learned today. What funding source do you plan to investigate further for your business? You can check off multiple here. So please take a moment to participate.
Mm-hmm.
To remind everyone, we are being recorded and we will share the slides as well as the recording after, and we will be conducting GoDaddy Community to answer more of the questions. There's a lot of good questions coming in because we know it's a challenging topic. Hopefully the man behind the scenes has got our answer. There it is. Other funding, grant, self-funding, and bridge lending. Yeah. Those are the most attractive for folks, but again, sometimes they're the hardest to come by. These days, there seems to be more, so we encourage you to go out and explore those grants.
Great. Here's a couple of things that everybody on this phone can, or on this call can take away. I think one of the things that we use in our organization that could be really good for you as an individual is setting up SMART goals, specific, measurable, attainable, relevant, and most importantly, time-based goals to help you think about your next 3 months, 6 months, 12 months, 24 months, so on and so forth. I mentioned how important it is to review financials. I think it's also very important to sit down and really figure out potential SMART goals that you might want to put in place to help grow your business. An example that we put here is, let's say I run a retail operation and I want to establish a food truck. I want to be able to understand how that food truck will help me grow my business. I want to be able to understand how the potential costs associated to a food truck can either help or hurt my business. I want to be able to put very specific timelines as to when I'd want to go out and do these different things. You'd be surprised at how helpful it is to put timelines on some of these goals to really help drive momentum and get to the point of getting to these goals. And the last piece of advice, and I know we covered a lot, and this can be really helpful as you think about, how do I put together SMART goals? I have a lot on my plate. How do I look through this? I want to point your attention to these quadrants, and these quadrants have actually helped me and my team as we think about our day-to-day and long-term roles and responsibilities. The top row, what you'll find is urgent responsibilities. On the bottom row, you'll find non-urgent responsibilities, right? So top is urgent, bottom is non-urgent. The first column is not important work, and the right column is important work. And so when you think about urgent and not important, which is the yellow box, you want to be able to find individuals that you can delegate this work to. And so an example of urgent and not important work means you need to communicate something to your larger team. You can find point people or key individuals within your organization that you can have handle that responsibility. Non-urgent, not important, or things that you have to identify are just not top of mind at the moment, and figure out a way to either delay doing it or not do it at all. And so it's very important to get rid of the fluff so that you can focus on the more important opportunities that you need to pursue. When you think about urgent and important, which is the red box here, you want to be able to be proactive about getting that done as soon as possible. And so think about what are the things that need to get done within the week, within the day, within the hour. Figure out ways in which you can carve out time to get those done as soon as possible. And I think for everybody on this line, I think the best place to be in is the non-urgent and important. And so this is you thinking ahead. 3 months from now, what is it I'm going to need in order to grow my business? How do I start working on these things now, right? How do I create a process or flow in order to get to these options? And so really great takeaway is using these quadrants to help you identify some of the activities or tasks you have at hand, and just try to place them in these boxes to help you identify how to best approach them. It's a really good exercise in my opinion. With that being said, let me go ahead and get the Q&A available or open. And so Marion, if you want to take it away from there.
Yeah, thank you, Ricardo. This is really helpful. So again, a couple of questions about angel investors and equity investors. Other than Shark Tank, which we're all familiar with, how do we go about finding them?
Yeah, I think it's really important for you to start looking at your own network. A lot of people don't actually understand that your friends and families are investors, right? And so when your friend says, hey, this is a really great concept, a really great business, how do I support? You should be looking at them as potential angel investors, right? And so the best place that you can start, there's not gonna be a Mark Cuban that walks down the street. First place that you should start is your own network. Tap into your friends, tap into your family, get them really excited about what you're doing, and use that as an opportunity to start building your community, your network for potential equity investment opportunities.
And you could also go to friends and family for debt. I mean, you could take a look out and just have an agreement with them that you're going to pay them back at a certain interest rate.
For sure.
Many clients do that, but always put it in, these type of things. So that's important. I think we got another question around industry specific. Are there any lenders for specific industries?
Yeah, so commercial banks tend to be a little bit hesitant as it relates to restaurant or food-based industries. However, I want to stress that commercial banks are not your only options. Marion and I work with a team of CDFIs or community development financial institutions that make it a point to lend to small businesses that would otherwise get turned down for commercial banks. And so I would encourage you, if you're finding that you're walking to a commercial bank and they're saying, hey, for one reason or another, we can't provide the funding, there are a ton of nonprofit mission-driven organizations that make it a point to lend to small businesses. And so there are definitely opportunities that exist there.
Yeah, and there's definitely resources, small business organizations in every city across this country for you to tap who would be able to help you at no fee, a lot of nonprofit organizations. So thank you. Let's move forward.
Next steps, review your current financials, review your funding sources, including requirements and considerations. Please go ahead and take some time to set some SMART goals. And we actually have some office hours, so I encourage everybody on this call to join us for those office hours with any additional questions. With that, let me go ahead and turn it over to Rachel to wrap us up.
Hey guys, Marion, Ricardo, you guys are amazing. That was a lot of information, but I think it's super valuable right now for everybody who was with us and also anybody who's going to be able to listen to the recording moving forward. So as Ricardo mentioned, we're going to move over to the GoDaddy Community Forum for questions. There are a lot of questions. You guys asked super good questions. So if your question didn't get addressed, please come over and join us. Even if you don't want to post, you can sit and watch other people's questions and the team will be addressing those. So just really want to thank you for joining us today. We know everybody's really busy and your time is valuable. So really appreciate having you here with us. Thanks so much to the Next Street team. Again, you guys are amazing resources for small business. So we're really happy to have you as a partner. Come on over to the GoDaddy community. And again, you might even get to know some people who live in the same region as you or who have the same kind of business, and you guys might be able to connect that way. It's always good to know other people who are in a similar situation. And then we've got a survey that would just popped up on the screen. If you just take a minute before you pop over to the GoDaddy community forums, we'd appreciate you filling that out. And thanks so much. Take care and hope to see you soon.